Investors and media, good afternoon. I'm the speakwoman of CDF, April Pan. First of all, welcome all of you to join the Q4 2023 Performance Investor Conference of 2023. There are 5 parts. We will invite Steve, the president of CDF, to introduce the 2023 performance review and the strategy update of our ABCD strategies. In the ABCD strategy update of the subsidiaries and performance review will be covered by the presidents from the subsidiaries. And the third part is our financial overview. We will invite Jenny Huang, the CFO of CDF, to introduce the financials from CDF. And the fourth part is the performance review of the subsidiaries, and the presidents from the subsidiaries will talk about the achievements and performance highlights. And lastly is the QA. Before I invite Steve, I would like to remind you, if you need translation, you can use the WebEx function.
So now I hand over to Steve, our CEO, Steve. Stage is yours.
Thank you, April. Good afternoon, everyone. Thank you very much for joining. So I'm going to start by giving an update on our 2023 performance. Net income for last year was 18.94 billion, reflecting 16% year-on-year growth. Additionally, our comprehensive income was 53.8 billion. We're selected for the 4th year in a row to be included in the Dow Jones Sustainability Index. And we also aligned the brand positioning of all our consumer-facing brands with the rebrand of KGI Life. In terms of our life company, net income was 10.18 billion, and their net worth increased 39% year-on-year. Life remains focused on higher value products with further VNB margin expansion to 35.5% from 30.5% the prior year. Also, our pre-hedging recurring yield was up 11 basis points to 3.86, and we continue to have the lowest cost of liabilities. In terms of our bank, net income was 5.4 billion for an ROE of 8.26%, and our wealth management income grew by 33%. SME and personal loans continued with very strong growth of 13 and 21% respectively, and our consumer finance profits from our joint venture in China were up 143%. We also increased our stake at the end of the year to 37.6%. KGI Bank now gets 12% of his income from overseas, up from 1% in 2021. CDIB Capital had net income of 2.2 billion, a very strong growth from the prior year where we had a small loss. Also, they formed new partnerships for 5 industrial funds or public utility projects, and we're expecting our fee-paying AUM to increase by almost 20 billion this year. We also selected 10 potential teams to pledge match funding on NDC's Regional Revitalization Initiative to support micro and small business to energize local economies. KGI Securities had net income of 7.3 billion, up 102% year-on-year, and overseas contribution increased to 14.6 from 11.3, particularly led by very strong growth in Singapore where we had a record year. We maintain our number 1 position in ECM and DCM, and brokerage market share increased from 10.4 to 11.1%. Also, the focus on wealth management AUM has been very successful with 31% year-on-year growth up to 443 billion. Last year also KGI SITE became a Tier 1 subsidiary to help us accelerate our growth in asset management by focusing on institutional business and retail ETFs. I'd now like to spend a few moments to give you an update on our ABC strategy. For those of you that may recall, we put this in place at the beginning of 2021, and I thought I'd share a few key highlights in each area. In terms of digital, the percent of online transactions that we now have at the bank is 87%, KGIS 79%, and we've seen a doubling in our life business from 9% to 21% since 2021. Also, our share of digitally acquired customers since 2021 is up 43%. And last year alone, we added over 150 features and enhancements to our applications. A new area of focus for us is AI, and I'll talk more about that in a moment. In terms of becoming employer of choice, we continue to see very good growth in our employee engagement score from 61 in 2021 to 73 in 2023. We also continue to enhance our training and work on our values with over 179 values awards given last year. We further enhance the employee experience by improving our benefits for maternity, paternity leave, employee assistance, volunteer leave, and other programs. In terms of customer focus, our Net Promoter Score as a holding company has moved from number 5 to number 1 since 2021. We also increased our number of active customers last year by 5%. And we've materially increased the number of customers that are giving us consent to share their information so we can help other subsidiaries meet their needs. In terms of driving growth and execution excellence, you hear more about that from the presidents. I'll leave that to them. I just want to make 2 points. In terms of our end-to-end straight-through processing, which is a key metric that we look at, just since last year alone, the bank improved by 21% to 60% of all transactions being pure digital. Securities improved 35% to 58%. And our life business also improved to 18%, which is an 8% improvement. And as you're aware, we continue to make very good progress on ESG, and you can see a lot more information on that in page 35. In terms of AI, as all of you know, this is a new area of focus, not only for us, but for everyone. Now, there are 2 types of AI. One is traditional AI that most companies, including us, have been using for quite a few years, which is primarily around using neural networks and also decision-based trees. But generative AI is new, and everyone's in the same starting place. So we think this is an area for us to really focus on where we can create competitive advantage. On this page, you see some examples of the core technologies that we've started adopting in many of our businesses so that we can become more proficient and create real value for our customers and our staff. In summary, we continue to execute and make strong progress in our ABCD strategy. We had a strong start to 2024 with year-on-year performance up 21%, and we look forward to continued strong performance for the rest of the year. I'll now pass it on to Eric to give you an update on KGI Life.
I will then talk about the ABCDE results in 2023. To build a young and energetic brand and to have consistency across the group, starting from January 1st, we have changed our name from China Life to KGI Life with new product design and new corporate value proposition committed to your prosperity. Through rebranding and group resource integration, we can provide comprehensive financial service to our customer and truly become customer-centric. At the same time, in line with AI trend, we have introduced the latest generative AI for agents training. This is the first in the industry. We simulate different sales scenarios and different customer demands to improve agents' learning efficiency and sales skills, building the best team in the industry. And for the transition to IFRS 17 and ICS in 2026, we continue to promote product transformation, and in 2023, we have also seen some initial results. Our traditional foreign currency FYP reached 26.4 billion, number 2 in the market. Protection type FYP reached 20.7 billion, increased 40% YOY, number 2 in the market. For 6K Plus product, FYP reached 21.1 billion, number 3 in the market. This year, we will continue to improve our productivity and profitability and pursue stable long-term financial growth. This is regarding KGI Life, our results of our ABCD strategies.
Next, I'll talk about KGIB's strategy progress. First of all, in Accelerate Digital, we continue to expand the Alliance Network. In 2023, we collaborated with 11 partners including taxi, fleet, e-commerce, delivery, and rental platforms. We also won many awards, and it also reflects in our retail business growth. This year we'll continue to be creative and provide digital convenience, improve customer experience, and expand the bank business. In terms of customer-oriented, we'll continue to expand our RM and IC team. The wealth management fee income reached 33% YOY, and this year we'll continue to expand the business. And we expected to grow the percentage of the income in retail business. And the wealth management income improved to 60%. In terms of execution excellence, we continue to committed to ESG-related credits. The green loan balance reached 17 billion and improved to 6.3% YOY. And we continue to expand the solar power and wind power projects. And we actively participate or lead ESG-related loans. We will continue to support the green business and expand our corporate businesses. Good afternoon. I will talk about CDIB Capital Strategic Progress for 2023. In terms of partnership, in 2023, we collaborated with healthcare, semiconductor, AI, and advanced manufacturing sustainability, and built a strong infrastructure. In terms of product innovation, in 2023, we hosted a inheritance-related FED seminar, and we also provided private credit, and we collaborated with different funds in terms of customer orientation. In terms of investor, we started to hold knowledge sharing seminars, total 23 in 23. In terms of investor, we help them to obtain key resources, including senior management and cultivation services. In the ecosystem, we help them to identify potential opportunities of collaboration. In terms of execution excellence, we'll continue to do upstream lead by our employees to improve the efficiency. We also leverage AI to create risk appetite dashboard, combining the financial data to help us understand the status of the portfolio. Now I'll hand over to KGIS. I'll talk about the ABCD strategy progress of KGIS. In digitalization, I find out the overseas bond trading volume improved a lot. In order to help the customer, our app e-strategy, we launched the overseas bond trading service. Meanwhile, unlike other securities, we launched 700 bonds, and customers can choose the suitable products. And lead by the AI trend, to fulfill the needs of the high-frequency traders, we provided the real-time API connection trading service for U.S. stock market. In this way, it can improve the efficiency when investors trade in the U.S. stock market. In terms of become employer of choice, we introduced the smart eKYC to optimize the authorization or adjustment of customer transaction limit and simplify the application process to reduce the burden of our employees. In terms of customer-oriented, since Taiwan's society becoming an aging society, we obtained the highest number of RFA certification among our peers, and to improve the skills of our FAs. By the end of 2023, we are the highest among the peers. We have 22 FAs obtaining the certificate. In terms of drive growth, to deepen the collaboration within the groups, we can provide one-stop service to the group customers. We trained more than 1,000 KGI Life salesperson to obtain the certification for security specialist exam. And we also obtained the approval from the FSC. And now we're going to submit the application to the security and trading agencies. And if we obtain the approval, we can expand the sales team and provide one-stop service to the group customers. Next, I'll hand over to our CFO.
Thank you, William. Now I'll talk about the financial overview for 2023. Please go to page 14. The 2023 net income is 18.94 billion. And because we have seen a recovery in our LCI, so it also affected our net worth. The ROAE shown here is only 8%. However, if we include the OCI rebound and do the calculation of ROAE, it's actually higher than 8% listed here. Our EPS of 2023 is 1.13 NTD, and our total asset has amounted to 3.6 trillion, up 3% compared to last year, and total equity also is up 26% to 263 billion. And the end of year earnings per share is 14.27 per share, and our net worth is also on the rise. Next page, in terms of the profitability of our subsidiaries, KGI Life's net income is 10.2 billion, although it is slightly compromised because of the hedging cost. But OCI of KGI Life has also rebounded by 30 billion. And KGI Bank's net income is 5.4 billion, down 1.1%. This is coming from the negative carry of the bond. But if the rate will be cut in the near future, this will reduce the effect of negative carry. And in terms of CDIB, because of valuation return and our performance has picked up from the negative of 0.3 billion to positive 2.2 billion. KGIS has seen a triple growth in terms of net income. In terms of brokerage, wealth management, and investment, KGIS has seen significant growth comparing to 2022. And next page is the capitalization of the group. Our double leverage ratio has gone down from 128% in 2022 to 122% in 2023. And this is coming from our OCI rebound, and we have picked up. If you see the subsidiaries' capital adequacy ratio, they are well above the regulatory limits, and our capital is very strong. Taiwan Ratings has recently ensured that our rating is AA-, and the long-term outlook is stable. And that will be all from me. And now we'll hand over to Eric on KGI Life's performance. This is the 2023 performance of KGI Life. Let's look at page 18. 2023, our FYP is affected by the rate rise, and this has affected to the momentum of the insurance industry. However, KGI Life has made adjustment in our product strategy. We focus on US dollar policy, long-term policy, and protection-based policy. So our product structure has been optimizing. From the slide here, you can see in the FYP, we have the highest ratio in terms of traditional regular payment products. And the first FYP for the traditional products has amounted to about 90%. In terms of assets and liability allocation, since we focus on foreign policy, our foreign policy weighting has amounted to 58% in terms of its contribution to total policy income. So in terms of sales channel, KGI Life, in addition to maintaining a multiple channel sales, we also enhance on our self-owned agency channel. In terms of the FYP distribution for agency, agency has already climbed up to 31%. And since this channel is focusing on long-term and protection-based products, although the FYP accounts for 30%, but if we look at its CSM, it actually contributes more than half of the total income. And the next page is the operational performance. Because of the decline in premium, our VNP has dropped by 13% compared to the previous year. But since we are focusing on high premium, high CSM products, so our VNB margin has amounted to 35.5%. If we exclude the ILP, then this figure will be 39.2%. In terms of investment spread, because the rise of high hedging cost, our investment return is at 3.31%, while our COL is 3.03%, maintaining a stable positive spread. And next is on the investment portfolio. We focus on the liability and asset management and the long-term return. We use fixed income as the main investment position, and we also seize other opportunities. We didn't make much change to our investment portfolio, but the portfolio change reflected in this chart also reflects the valuation changes. And the investment return is also listed here. Here, for overseas contribution, they are the return before hedging. Next, on page 21, investment performance. Because of the new money return increase, our recurring yield has been up by 11 bips to 3.86%. In terms of hedging cost and hedging structure, 66% of the hedging is done through currency swap and NDF, and because of the US dollar depreciation, our hedging cost has amounted to 1.53%, and the FX reserve balance has amounted to 9.77 billion. Next, I'll hand over to Wayne. And now is the KGI Bank's performance. In terms of profitability, our net revenue of 2023 has amounted to 13.6 billion. Our fee income also seen a 12% growth annually, especially in our wealth management income also grew by 33%. The spread is also widening stably, amounted to 2.1% in 2023. In terms of NIM, NIM is at 1.32%. As for our asset quality, we've observed that our asset has been quite stable. Our NPL ratio is also maintaining flat. In addition to we're actually adjusting our loan mix. Here you can see in terms of the institutional financing, we have did some adjustment. We focus on retail lending. We have seen double-digit growth in terms of SME lending and consumer loans. In terms of deposits in 2023, the demand deposit, our CASA ratio has climbed up to 41%. Although our loan scale didn't grow too much, this is also affected by the post-pandemic environment. But we want to increase our loan and deposit scale to enhance our business income. And our deposits our NTD demand deposit has grown quite significantly. We hope by doing so it can enhance, it can introduce stable growth to our bank.
Let's invite Melanie Nan from CDIB. Now I'll talk about the 2023 performance review. Please go to page 26. First of all, in terms of AUM, in the first part, the AUM commitment from 50.4 in 22 to 52.1 billion in 23, excluding the funds of 23. Among the 52 billion, US dollar accounted for 51 billion and NTD accounted for 27 billion. For principal investment composition, the total number grew from 30.2 billion from 22 to 34.2 billion, including the private credit and corporate inheritance and other instruments. In terms of the geography, Taiwan accounted for 39%. Next page. In terms of the operational performance, we have stable income from fee income and new businesses. The fee income slightly dropped to 574 million from 622 million in 22 because some of the funds already in the exiting period and were still raising the new funds. Therefore, we can see this transitional effect. Like Steve mentioned, in 2023, we initiated a lot of fund investment. We collaborated with Honkai, Innolux, and Japan National Funds. We launched a lot of the invest projects. And this year, we believe the fee income will see further growth. As for return on investment, on the right side, our ROI improved from 1.7% from 22 to jump to 11.8% in 23. Compared with the MSCI World Index, it's more stable. That is due to our asset allocation includes direct investment and fund investment, and private credit and private bond. We have multiple investment instruments. Therefore, our ROI is more stable. On the bottom part, that's the new business growth momentum. Like I mentioned earlier, we launched a new investment for non-equity alternative asset management. That's mainly on private bond. It grew from 251 in 22 to 333 million in 23, and the cash income grew from 2.5 billion to 3.2 billion in 23, and the investment return is around 11.6% to 11.8%, and it is the stable growth momentum of CDIB. And we'll also provide other products. That's all from me. Next, we'll move to KGIS. Thank you. I'll talk about the 2023 performance of KGI Securities. In page 29, on the left side, we can see the net revenue benefiting from the boom market. All of the revenues of growth and totaled 15 billion, and the annual growth is 35%. On the top right, we can see customers' AUM reached 443 billion. compared with the previous year, we see a 31% year-on-year growth. Wealth management and asset management, they both grow. On the bottom right, it is the wealth management related revenue. We built a customer-focused wealth management business. In 2023, the growth rate is over 50% and reached 1.86 billion. Next page. On the top left, the net income composition. Our net income is 7.3 billion. Overseas contributed 14.6%, contributed more than 1 billion. The Singapore branch obtained record high net income, and they also work on professional institutional investors. In Singapore, the brokerage market share ranked number 1. On the bottom left is the ROAE comparison with the industry average. The darker green is KGIS and the lighter green is industry average. In 2023, our ROAE is 13% and slightly better than the industry average. Lastly, on the right side, that's our market positions, and all of the business are growing. We still maintain our leading positions. Next, I'll hand back to April.
Thank you, William, and all the presidents and their summary. Now we'll move on to the Q&A session. We'll first invite institution, investor, and analysts to raise their questions first. And please remember to click the hand waving button to show us that you have a question. The first question is from Jamie from JP Morgan. Can you hear me? Yes, we can hear you. I have the following questions. First is for KGIB. Sorry, Jamie, can you speak up? For KGIB, I know that your slide says your NIM increased the swap revenue. Can you describe Q4, the adjusted NIM and the NIM excluding swap? Can you give us the figure? And the whole year swap revenue for the previous year? And what will be your outlook for NIM for this year? And questions for KGI Life, can you share with us if the C3 risk increase, how would it affect your RBC? And other lifers announced that they have the plan to raise long-term debts. And for KGI Life, if you consider the ICS to be incorporated in 2026, would there be a need to issue sub-debt for long term? And if you do need that, what will be the amount? And next is the FX reserve. What is your limits for FX reserve this year? In terms of recurring yield, I remember from the last call, you expect this year you will see a 5 to 10 basis point increase. I'm not sure if you have changed this guidance. And lastly is your dividend policy. Since your OCI has rebounded by 30 billion, I wonder, could you use that to pay out dividend? If we look at the previous year's cash dividend payout, the ratio is about 50% to 60%. So please tell us the plan, and will you be paying dividend in cash this year or in stock as well? Okay, thank you. You asked questions about KGIB and KGI Life as well as our dividend policy. I'll now first hand over to Wayne to answer. If we exclude the swap position, our NIM is at about 1.05%, and the 24 outlook for NIM, if we include swap, we want to maintained at about 1.3%, and our spread will be maintained at 2.1%. And for KGI Life, we'll hand over to the Chief Actuaries to answer the RBC issue.
Hi. Regarding the stipulation and plan from IB for C3, the changes will be around 10+%. Our RBC will still be above 300, considering the changes. Due to sufficient RBC for sub-debt issuance, now we do not have such plan. IB has announced localization for ICS and transition measures. This will help support lifers in Taiwan. Our COL is lower compared to others, and we also continue to value ALM. Based on what the information we have now, there is no problem in terms of the transition. Next, I will hand the floor to Lauren regarding FX reserve. According to the formula, the upper limit is 19.8 billion, and for recurring yield, the guidance remains the same. It will continue to grow by 5 to 10 bits. Thank you.
The dividend policy will hand over to Steve.
So in terms of the dividend, as you know, our policy is to maintain a consistent dividend policy. In terms of 2022, as you know, that was an exceptional year. But now that the OCI valuation has rebounded, obviously our plan is to resume a dividend. The ratio that you quoted was before the 100% acquisition of China Life, which hopefully has an impact on that. So I think 2022 is probably a better guidance. And at this stage, obviously subject to the board and the regulator, our plan is to pay in cash only.
Are there other questions from analysts or institutional investors? Okay, Peggy from Morgan Stanley. Can you hear me now? Yes. Okay, thank you. I want to ask about KGI Life. Last year, FYP and VNB were both in decline, and this year, the market's January, February sales of policy is doing better. So what will be your outlook and what will be your goal for FYP and VNB? And comparing to other insurance company, they are all building up CSM and focusing on high margin products. And what will be your CSM goal in terms of amount for 2024? That's the first question. And next question is on COL. Last year it increased by 5 bips. What will be your estimate for increase of cost of liability for this year and next year? Third question has to do with the hedging cost. The hedging strategy for KGI Life has been quite stable, and I think it's at about 45%, judging from the historical data. And what will be your outlook for this year if Fed is to cut rates? What will be the impact for your hedging cost? That'll be all. Thank you, Peggy. About the FYP and CSM, we'll hand over to Eric to answer.
Peggy, last year the industry was affected by macroeconomy. We think the worst scenario has already happened last year. This year, moving forward, we maintain a positive view for FYP growth. We will have double-digit growth. But just like what you said, in 2026, we need to transition to IFRS 17 and ICS. We continue to focus on protection type product, foreign currency products. This is our goal moving forward. We will not pursue the absolute number, but rather focus on CSM and the quality of our products. And for CSM, I will pass the floor to Rochelle. Hi, Peggy. Just like what Eric said, we continue to focus on high CSM product. In 2023, our CSM compared to last year has improved by double digit, and in 2024, we also expect double digit growth as well. This is our target. And for CLL, to have better ALM, we focus on the sales of USD policies. But the CLL of USD policy is higher. So this year we expect an increase by 3 to 5 bips for our CLL. And for hedging strategy, I will respond. Indeed, if rate cut by the Fed and also rate increase rate in Taiwan, it will reduce hedging point cost. But FX fluctuation is still uncertain. So for hedging strategy, we will maintain a stable approach to have the flexibility and also to adjust our hedging ratio accordingly.
And next question is coming from Tina from Capital Investment. Can you hear me? Yes. I have a few questions here. First is to Life, your investment strategy. Last year, you have increased more position in Taiwan stock and overseas bond. And what will be the adjustment to your investment position? And also last year, what is your dividend income? And will you be aggressively trying to gain more dividend income, or you will focus on allocating your equity and gaining capital gain? And next question is on KGIB's in terms of loans performance was quite flat last year, and what will be the outlook for loan and the fee for your company this year? And your cost of credit, because in the fourth quarter we've seen an increase in your NPL. Is it coming from the case of London that you mentioned in the previous call? And what is the provision status and what is the credit outlook for this year? Okay, thank you, Tina. For Life's question, we'll hand over to Lauren.
Good afternoon. For investment strategy, we continue to focus on stable investment portfolio allocation, and we are positive for corporate income growth, so we will focus on high dividend equity. And will we buy more stock because of dividend? But because of the fluctuation of stock, we will remain the flexibility. And for dividend income, we will adjust based on market condition. And for bonds, we continue to bring up our recurring yield. Our USD policy, this will continue to be our focus, and we will purchase overseas bonds to increase their yield. For the bank, I will pass the floor to the bank.
And this year, our loan size, our anticipation is quite aggressive. We aim to grow loan by 10%, especially we want to grow the personal loan percentage. We are also going to adjust the structure of our corporate lending. Our focus is to increase the overseas lending. In terms of strategy, this year we also focus on fee income and raising our CASA ratio. And you mentioned on asset quality, because we expect to grow loan balance, so our credit costs will be maintained at about 15 to 20 bips. And for that single case of NPL case, we made the relevant provision and we don't expect to see great losses coming from that. And Peggy is raising your hand. Please, the floor is yours. I'm sorry, that was a mistake. And now we'll hand over the floor to the media. Shu Xian from Financial Times. Sorry, we didn't catch you. And now we do. Sorry, I think you're on mute. What about now? Yes. Okay. I want to ask the question about OCI recovery. Is you said about 30 billion. So can you put it into distributable earnings? Or if you can, what would be the amount and how would it affect the dividend payout this year? And or you are still using this year, this quarter's earnings to do the dividend payout? Okay, thank you for your question. We'll hand over to Jenny. Yes, Shu Xian, the question you raised, the OCI recovery can be partly converted, but this has to do with some technical issue. But our main focus on the dividend payout is will be still coming from our profits.
Are there other questions from the media? Okay, thank you for the questions. And that's all for today's investor conference. And later you can find the recordings from today in our website. You can also download the PowerPoint on the investor relation page. If you have other questions, we'll welcome you to contact us via email or phone. And lastly, thank you for participating and wish you healthy and fortune. Thank you.